Welcome to StockOdds Odds and End podcast, Thanksgiving week edition, helping you feast on ideas and opportunities for the week ahead. I'm Dave Singh here with Rob Friesen. Good evening, Rob. How's everything?
Oh, not too bad. Not as fun of a weekend as what you've had, but I've been working away, and you've been playing in Vegas, hey?
Well, who doesn't love Vegas?
Well, welcome back safely, right? So that's good.
Good.
Yeah, so we had an interesting week finish up there. The week previous was a bit more risk on, and then this past week here it was more defensive, as we can tell that a lot of it was capped off on Friday expiration. And keep the note of that too. A lot of times on expiration, we either open down and rally up a bit and then kind of do not much else for the day, or we open up and pull back a bit and again not much action. So that's more typical of monthly expirations. We've had a few that have had some pretty big rips, but we had opened and pulled back on this one. Became more defensive, so that kind of capped off the week. So just to let you know, consumer defensive was the top for the week at 1.56%. Healthcare next at 0.62. Utilities at 0.29. And then basic materials, which had a really good week the week before on the back of the U.S. dollar weakening, because when the dollar weakens, it's better for commodities, especially the metals, and energy to some degree. But the one that's more inversely correlated to the dollar is certainly the basic materials and gold, especially. Then energy would be. So we had basic materials, the worst performer for the week at -2%, and consumer cyclical -1.96. And we had a lot of retail sales, October retail sales, and other retailers' earnings as well. And of course, we have Black Friday coming up here. This is a really important week for retailers, and most people know this, but just to reiterate why they call it Black Friday is it's the first day in the year that the retailers are supposed to be in the black, and they kind of rely on a lot of consumer sales, and we'll see how healthy is the consumer is the question. What will the numbers show? So a little bit of anticipation of that, but we'll have the real numbers come Monday or Tuesday, even with Cyber Monday numbers out. So by Tuesday, we'll know exactly where the consumer stands for this holiday season here. Then we had kind of financial and technology kind of in the middle of the pack, and industrials, which are often in the middle of the pack. You don't often see industrials in the lead or the complete laggard, do you, Dave? They often fall in the middle of the pack, which if we said, hey, is it risk on or risk off, we'd probably say it's a bit more neutral to slightly risk on for industrials.
Correct.
Especially if there's political agendas with, industrial development, fix the roads, all that kind of stuff, and then the industrials respond. Or like, with Caterpillar and things like that, when you think about global recession or global growth, some of the industrials can do better if we're in a growth environment, and we're in this debate about inflation, meaning that we're going into recession, or is it stagflation? Inflation or stagflation? Stagflation is rising now in terms of the banter. And, will it be recession? And then one day in the future, we will see us probably shift from, inflation to suddenly deflation. I've mentioned that a few times in our conversations before, right, Dave? Sometime in the future.
Well, with all this technology is naturally deflationary, right? Anytime you build a machine, you replace workers and manual labor, and there's so much technology, AI, all this. At some point, it's just going to flip extremely hard the opposite way. So it'll happen probably pretty fast, from a period of high inflation to severe deflation.
And if you don't think that's possible, just look at some of the commodity charts that we've had over the last couple of years. How lumber can go, straight up, and then all of a sudden go straight back down to where it came from. I mean, blindingly fast and blindingly sharp, right? And we've seen that over and over again. So there's a plenty of disruption ahead. And even with this oil, we mentioned last week that I'm sort of, positive on the outlook for oil in general, but obviously this week it pulled back a bit. And corresponding to that, the US dollar was up a couple days. That number that we hit there was interesting because we had the one spike down on the dollar on November the 15th, and that hit 105.16 area. So that 105 is actually an interesting number. We had some both support and resistance on that before. So we kind of came right down to that 105, and it bounced up since then. So again, that's kind of why this week played out a little bit. If the dollar is really strong, it can impact even the stock market, not alone, commodities. So anyway, what do we got coming up? So we got a holiday on Thursday, Turkey Day, and half trading day on Friday, which is always an interesting day historically. I don't know why it is, but stuff happens. Stuff happens on that half day. Crazy stuff. So this might be a non-event, but I wouldn't be surprised if something else funny happens on Friday. But typically Wednesday's a little bit more bullish on the Wednesday right before Thanksgiving, and I think it's just a bit of the anticipation. It can also be a bit lighter volume as people do travel and cut out early. And I forgot to check. I think the bonds usually close early on Wednesday. I could be wrong, but do want to check on that to see if the bonds are closing early. But nonetheless, Friday's the half day, and then expect lighter volume, obviously on the Friday, and expect lighter volume even on the Monday. Okay, over to you, Dave.
Yeah, we see the same information in the stats. So the whole month of November for the S&P 500, it's about 3.3% expected return, but half of that is concentrated in those final 5 days of the month. So the final 5 days are expected to do 1.37%. So of the last 5 days, days 1 through 4 are the most robust, and the final day is slightly down. And looking at sectors, the QQQ is expected to do better than the Spider, and so are the small caps, the Russell 2000. So those are really robust, those days 1, 2, 3, and 4 of the last 5 days. And then if you look at the sectors within it, you see that it's more of the risk-on kind of sectors. Biotech, XBI, IBB, the ARC-KK, and retail. You talked about retail. XRT is usually a good performer in those final days, as well as consumer discretionary, XLY. So QQQ, risk on, that kind of theme. Things that are softer are gold, silver, GDXJ, GDX, silver, GLD, and even oil, XOP. So some of the metals might be softer, and retail and discretionary stronger. So it's a risk on undertone for those final days. And then we have a couple economic reports coming out during the week. On Monday, there's some Fed speak happening. Tuesday, not much going on, but Wednesday we get a couple reports out there: jobless claims, durable orders, consumer sentiment from University of Michigan, and the FOMC minutes come out on Wednesday at 2 p.m. Eastern. And at 1:30, Jerome Powell speaks. So that's always a market moving thing. People are going to hang on to every word. His tone, is he showing any signs of letting up on being so hawkish? But we'll see what what he says there. And then not much on Thursday. Not Thursday, of course, are closed, and not much on Friday. And there are a smattering of earnings, but no big major companies. Not like last week was Target. That was a big one.
Yeah, we're kind of past. I mean, normally it starts early in October, and we're kind of getting to the tail end of earnings, and then the dividends tend to clump. You get a lot of dividends in the latter part of November and all through December, because they usually follow the earnings cycle. So let's keep that in mind.
You're correct. So that's it. So there's some slight economic reports on Wednesday, but it is a risk on overtone from Wednesday on, and a little more focus on companies that sell goods and things like retail, XRT and XLY.
Just want to bring up Bitcoin is got a new shelf kind of that's been developing at the 16,000 level. 20,000 was really interesting because it traded there from pretty much middle of June all the way through. It popped up to 25 and back down, but most of it activity was around 20,000, which I thought was quite strange and quite manipulated. But if you go back on the monthlies, you see that the high from 2017 was 20,000. We were a bit lower than that in 2018, but 2017 December we hit a high. Was it December? Yeah, we hit a high of 19,666 in December of 2017. So that 20,000 became really important. We were trading along there, and then the FTX thing has knocked it down into the 16,000 level. The way things are looking, I wouldn't be surprised if it goes back to 10. 10 was a huge consolidation area, and one of those, almost like remember Dow 10,000. Remember how big that was? We used to have hats and parties, and it crossed back and forth over 10,000. It's almost like that with this. Is 10,000 is a big number. So this whole FTX thing has substantial systemic problems to it, and there's some great consolidated articles and videos that kind of put the whole thing together. One was done by Forbes. You guys can look it up, but it kind of goes through all the connecting the dots. About 130 other companies affected, about 1 million creditors. Top 50 creditors are owed about 3.1 billion, and there's probably as much as 8 billion owed all across the board or something. So it's pretty substantial, apart from all the other money that disappeared, which was basically fumes anyway. So a pretty big Ponzi scheme at the end of the day, and a lot of affected parties. So, it will have ramifications. One of the big ramifications, too, is that, it just points out again what happens when rates rise and you kind of have the end of that free money period. Because we've seen this in the past with other bubbles. And when the party stops, when the music stops, everybody's scrambling for a seat. And there's just not enough chairs, and a lot of people get affected. So again, when these policies come to an end, then you see the emperor with no clothes, right?
Yep. Especially the most levered players are the ones that blow up the fastest.
Yeah, I mean, leverage is like when we use leverage, in our trading careers, we talk about betting small per idea and having a lot of ideas, which is why StockOdds is great utility for generating ideas. You can generate them from a price discovery aspect, or from a noise, significant amount of samples. So you can have lots of samples or only few samples. So you can have both sides of the equation. With price discovery, it's good to create more if-then statements to get that confirmation. You were going to say something, then I'll go into something else here, Dave. What was that?
They're talking about the 10-year Treasury note. So it's just below 3.8%, but the Treasury yield spread of twos and tens is inverted. So again, that's another sign that recession is coming. And then also I was looking at copper. It's come down quite a bit from its high in the middle of the month. It's been trending downward. So that's also usually they call Dr. Copper, right? Signs of a recession. So it's not at the low of in October or in July, but it is headed back down.
Right.
So there are some recessionary like early indicators still showing weakness in the economy.
Right, and it's important to remember that when these things run its course, that you can have a big shift and you catch those rallies back up, especially if the dollar were to weaken again. You could have a nice move in copper, but because the demand side will be there, and they can't have it both ways. And we can't invest in the green revolution and not use copper, right? I mean, how much more copper is there in your Tesla than in your Jag, right? I mean, there's no comparison.
Wiring, yeah.
Yeah, it's no comparison. So, I mean, the thing is that there's a lot of copper demand that can be there, but generally, it's a good recession indicator. If it's falling, that means that's kind of the sentiment, the prospects, and so on. Anyway, I want to point out something about the SPY because Friday's low. We kind of came and tagged that close area from Thursday, and it kind of popped back up and closed, almost unchanged, but it was a bit unchanged, but almost. The interesting thing with the SPY is that you've got a great number to lean on. That was the 15th close and the 15th high. So we're talking about just over the 402 level. 402.31 is the high, and that close was 398.49. So that's something above us that can be a real great target to track towards. And if we break through it, then you're probably going to test the high from September 12th up in the 411 area, 411 to 412. Okay, now November 17th, Thursday's low is going to be a real important one at 390.14. So just remember 390 and 402. 390 and 402. That's how you're framing this. So we could chop around within there for a few days. I'm always suspicious of the light volume day potentially on Wednesday and the half day on Friday, where you can have a rip in the market and take out numbers when there's not a lot of volume. So just keep that in mind. Okay, so we got a good framing there on the SPY. You can do the same thing for the diamond, the Qs, and the Russell as well. Just get your numbers, make sure you know what to target. And again, it's very different if we're trading the noise and the chop and stuff than if we get a nice directional move. Let's look at where the futures are right now. Of course, things can change as they have many times from the time we've talked about it on Sunday to the morning. But right now, Dow Jones futures are down 78 points or 0.23%. S&P down 11.5, which is 0.29%. NASDAQ down 28.75, which is 0.25%. And Russell is 0.26% or down 490. So they're all roughly in that just down a quarter point area. And the VIX is up slightly, 0.96%, almost 1% up at the moment. And again, the currencies, the US dollar is up 0.40, almost 0.5%. And it's looking like it could retrace back. I would think a target would be 109.14. So it's currently at 106 or 107. It's 107 and a quarter. So our target would be heading back towards 109.14. So just remember that. Okay. Should be an interesting week. We'll let you guys go. Good trading,
Good luck.
everyone.